Welcome to Celebrity Investing, your go-to source for insights, tips, and updates on navigating the exciting landscape of personal and global finance. Please like, share, and subscribe for more exclusive content. This is part 2 of how to start investing in renewable energy for profit and sustainability. Energy storage breakthroughs. The rise of affordable and efficient battery systems is a game changer for renewable energy. Energy storage allows solar and wind systems to store excess power for use during cloudy days or calm winds, solving the challenge of reliability. Companies like Tesla with its Powerwall and other innovators are competing to make batteries cheaper and longer lasting, creating exciting investment potential. Smarter grids. Smart grid technology is modernizing how electricity flows and is managed. Artificial intelligence, AI, and machine learning now help optimize energy distribution, reduce wastage, and integrate diverse renewable sources into national grids. The push for intelligent power systems makes the grid less dependent on fossil fuels and more efficient overall, a trend worth watching. Efficiency enhancements. Solar panel efficiency, for instance, has improved significantly. A decade ago, panels converted around 15% of sunlight into energy. Now, many designs regularly achieve efficiencies of 20% or more, and next-gen technologies like perovskite solar cells may exceed 30%. Increased efficiency can significantly reduce costs, driving accessibility and making investment opportunities even more attractive. These advancements don't just make renewables more competitive, they create openings for investors to back cutting-edge solutions that could define the future of energy. Policy changes and incentives. Government involvement continues to be one of the strongest drivers of renewable energy investment. Around the world, policies are being reshaped to encourage the adoption of cleaner energy. Financial incentives, investment tax credits, subsidies, and grants are making it easier for companies and individuals to adopt renewable technologies. For example, the United States Inflation Reduction Act includes billions earmarked for clean energy projects, offering direct financial benefits to investors. Regulations favoring clean energy. Many countries are phasing out coal plants and adopting stricter carbon emission standards. The EU's Green Deal is an example, with its ambitious goal of being climate neutral by 2050. These regulations force industries to shift to renewables, creating massive demand. Global agreements. Treaties like the Paris Agreement continue to push countries toward adopting renewable energy. When nations set renewable energy benchmarks or push for net zero goals, it spurs private and public sectors alike to act, driving investments as governments race to meet their targets. Policy shifts not only affect current opportunities but also set the stage for long-term growth. Keeping an eye on emerging incentives and regulations can provide valuable insights for anyone looking to invest in renewables. Corporate commitments to sustainability. The private sector is stepping up in a big way, and their efforts are bringing significant investment opportunities along with them. Renewable energy purchases. Many corporations are investing directly in renewable energy to power their operations. Companies like Amazon and Google are purchasing power from wind and solar farms to meet ambitious sustainability goals. As these deals scale up, they create reliable revenue streams for renewable energy providers, boosting the sector's appeal to investors. Environmental, social, and governance (ESG) goals. ESG investing isn't just a trend anymore, it's becoming a necessity. Corporations are under pressure from stakeholders to meet measurable sustainability targets. This has led to increased funding for projects in solar, wind, and other renewables. By aligning investments with ESG-focused businesses, investors can benefit from this rising demand. Corporate-led innovations. Businesses are also driving innovation. Tech companies are developing energy-efficient systems, while manufacturing giants are incorporating renewable energy into supply chains. These advancements ripple through industries, creating ripple effects that increase opportunities for renewable-focused investors. When corporations commit to sustainability, their influence often shapes industries and markets. Their push for renewables isn't just good PR, it's a shift that investors can tap into for consistent, long-term returns. In understanding these trends, it's clear that renewable energy investing is no longer just about individual choices. It's about tapping into a movement shaped by innovation, policy, and corporate action. Every day, new opportunities are emerging, making this an exciting space for those ready to step in. Challenges and risks of renewable energy investing. Investing in renewable energy has great potential, but like any investment, it comes with its share of challenges and risks. Understanding these risks is a key step in making informed decisions. While renewable energy is growing rapidly, there are some hurdles that investors should be prepared for. Market volatility and unpredictability. The renewable energy market, though promising, isn't immune to volatility. Prices of renewable energy stocks and funds can fluctuate widely due to shifts in demand, raw material costs, and competition. For example, solar and wind companies often rely on materials like lithium and rare earth metals, which have supply chains prone to disruption. A sudden spike in these material prices can directly impact company profits and, in turn, affect stock performance. External factors such as global economic conditions, wars, or even trade disputes can also influence market stability. For instance, tariffs on imported solar panels can raise costs, causing uncertainty for investors. Investments tied to renewable energy projects may experience delays or financial strain when markets wobble, which could eat into expected returns. To make things trickier, renewable energy projects typically require large upfront capital. If energy prices drop unexpectedly, the return on these investments might take longer than anticipated. This adds an element of unpredictability that can deter risk-averse investors. Technological and infrastructure risks. The renewable energy sector is fueled by continuous innovation, but not all technologies are created equal. Some, while promising on paper, struggle to deliver in real-world scenarios. For instance, emerging solar and energy storage technologies may face efficiency problems that delay deployment or lead to costly updates. Infrastructure is another complex challenge. Renewable energy systems must connect to power grids, many of which were built decades ago to support fossil fuels. In regions with outdated or limited infrastructure, integrating solar or wind power can lead to logistical hurdles and added expenses. A lack of charging stations for electric vehicles or energy storage facilities in rural areas, for example, limits the scope and scalability of renewable efforts. Additionally, while renewable energy is generally sustainable, maintenance can be an issue. Wind turbines and solar panels, for example, face wear and tear over time. If the technology isn't durable or widely repairable, operational costs can rise and eat into earnings. Regulatory and policy risks. Government regulations and policies play a massive role in shaping renewable energy. While many laws are designed to encourage clean energy adoption, they can sometimes change quickly, creating uncertainty for investors. For instance, a country might scale back renewable energy subsidies or tax credits due to budget constraints or changing political priorities. When these incentives disappear, project profitability can be significantly impacted. Some governments also impose stringent permitting requirements. If new energy projects face lengthy approval processes, investors may experience delays or even lose opportunities altogether. On the other hand, poorly defined regulations can lead to oversupply in the market, causing downward pressure on prices and returns. Additionally, policies that prioritize natural resources or other sectors, such as oil and gas, over renewables can create an uneven playing field. Regulatory changes, whether sudden or gradual, can often feel like shifting goalposts, leaving investors scrambling to adapt. In an industry so intertwined with politics, even changes in leadership can disrupt plans. A pro-renewable government might be replaced with one less focused on green energy goals, leading to a slowdown in new projects. Such shifts highlight the importance of staying alert to policy trends when committing capital to renewable energy investments. By keeping these challenges in mind, investors can better assess their risk tolerance and prepare for fluctuations that might come their way. Stay tuned and continue to watch our videos to gain valuable insights into the world of finance. Subscribe, like, and share to continue your journey to financial success.